All right, I'm recording.
So does
Awesome.
Timo want to start for us?
Yeah, I'll go ahead and start. So I'm Tim, and let's see. I've been trading. I've been doing investing for since I was 18, 19 years old. I just recently started actively trading, maybe about 2 to 3 years ago. But I do a lot of research, a lot of studying. When we talk about options, I mostly do spreads. I like to be a net option seller, and the reason being is because I'm horrible at picking direction. So the reason why I do that is I can kind of just set a level where I think I can look at support, which most people can, set the level and go about my day and not have to day trade it, and then I can basically I don't have to sit there and watch it all day. And I know how much money I'm going to make, and what's the max I can take in my losses. Yeah, and that's pretty much it. That's kind of my thing. What about you, Paul?
Okay. I guess I started trading a little bit about 6 years ago. On and off, I kind of wanted to get into something that could make money outside of going to a 9 to 5. I had been interested in it for years before that, but never really did anything with it. So what I did is I opened an account with Options Express. The commissions were horrible. It was awful. Now I know this now, but I was basically just donating money to the market because I had no idea what I was doing.
Education money.
Yeah,
exactly. Education is a beautiful thing. So back then I was just buying calls and thinking, okay, well, I'm just going to buy a call on this because earnings is coming up, and I was gambling. I wasn't trading is what I was doing. I was gambling is what it was. And obviously I blew my account up. So I just it took a back seat. I got out of it thinking, okay, well, this is for people who sit on Wall Street and they do this kind of thing for a living. That's what this is for. It's not for retail people because they just donate money to the market makers. And then later on, it was about 8 months ago, something like that. I kind of got a little bit back into it. Stumbled upon Simpler Trading and kind of did one of their classes and thought to myself, okay, I'm either going to do this or I'm not going to do this. It's one of the two. You're not going to, just stick a toe in the water. You're going to jump in. So I opened a TOS account, TD Ameritrade, did some more of their classes, and really kind of dove in and really started to learn the back workings of how the market works and everything.
Gotcha.
So that really, really helped. Really helped me figure out kind of what I wanted to do and what direction I wanted to go, whether it be holding long stock or options, futures, what have you. So that's that. I really, really focus more toward the options because that's kind of what I was interested in before. So I really dug deep and kind of buckled down and wanted to learn how this industry works. So bought a bunch of books, did classes, and I think it's really paying off with taking your education very, very seriously. You're not going to like read a book on golf and then expect to be a pro golfer the next day just because you read a book. You actually have to do it also.
I agree.
Practice. So that's why I'm integrating what I'm doing now along with my education and learning. So as you all can see, my dog is in the background. So
it's all good.
She's my trading partner. But, so that's kind of how I came about. That's what I
nice.
How everything came about.
I know all three of us basically have very. I'm not gonna say unique because nothing we're doing is unique at all.
But
I would say to the new person, they would look at us as like, okay, Austin's day trading, Tim selling basically spreads and freaking Paul, I don't know what the hell Paul's doing. Paul just does whatever he wants.
Witchcraft and wizardry.
Yeah, so I know he likes using the Fibonacci retracements and extensions a lot, but we all have really particular styles that we trade under. You know, I've always been, not gonna say always, but I've been against the whole buying options but it seems like Austin's doing.
I
pretty
love
well.
buying options.
Yeah, so that's
I go
so
long
I-
options myself too and do crazy.
So Austin
crazy
does
spreads.
fairly well. So I kind of want to hear. I mean, he's
Yeah, so I'll
he's-
talk about myself now.
Yeah, what are you? 18, Austin?
I am 18, yeah.
Yeah, man. So you're half my age, and you're probably light years ahead of me, bro. When I was 18, I'll tell you that right now.
Yeah, so I've always been like of the mindset to like do stuff by myself to make money, or like like go do lawns and whatnot. And then I was sick one day when I was 17, and I was watching a documentary that tells a lot about who I am if I watch a documentary. But I was watching it, and it was about people who were rich and how they made their money, and of course Warren Buffett was on there. So I was like, oh cool, I got to learn how to invest. So I like watched this whole thing on investing with PE ratios and value investing. I'm like, this is so dumb. It takes forever. Like, this is
for
whatever.
like really old people who don't.
And then, of course, you stumble across legendary Tim Sykes on YouTube, right? So then penny stocks is where it's at, and so that's what I was doing for a bit. Of course, that was terrible.
You should see what Tom Sosnoff tells Tim Sykes, man. It's so funny. I sent that video to Paul.
That was a great video.
I'll send it to you, Austin. But
All right.
Tim gets really upset and hurt. It looks like it looks like he wanted to tell Tom off, but
In a hurry. He gets upset in a hurry, but he's
Yes.
Yeah, so the penny stocks were more like based off like hype and volume and like someone who was like pumping it, and that's not really my style. I like I like something that is consistent and like does like the same thing. So then I transferred. I started doing. I found Ricky next, of course, and well, I don't know if y'all know who that is with TechBuds Solutions and all that.
Yeah, I watched some of his videos.
Yeah, so then I did a bunch of swing trading stuff, but then I realized that was just not my personal thing because I really didn't like going to bed stressed about like, man, what if the market just like overnight like crashes? Like I didn't like that feeling of holding money.
I can understand that completely.
So then I was like, I really like day trading, but I can't do these penny stocks, and I can't like only have 3 trades a week for a 1% move on T-Mobile or something. So then I found options. I don't know how I did, but I did. So long story short, I've been in the market for about a year now, and options for about 2 months. And it was a long going with learning about options, but now I do that, and I'm like a buyer. Like I buy options, I guess. And
Okay.
but my favorite is puts. I really love when the market goes down.
It's awesome when the market goes down because IV increases so fast. because
Dude, I
everybody's
know.
freaking
Like,
out.
I know. What was it? It was Tuesday, right? Yesterday when the market dropped. I was looking at some puts for, I think it was like $260 a contract, and then when I came back from class, it was like $2,000 a contract. I was like, God, I hate class.
Yeah, exactly.
Was that on Spy or what was that?
Yeah, it was SPX, so basically
Oh,
SPY.
the SPX. Okay.
Yep. Was it in the money at that chance? By that point, was
Oh
that
yeah,
in the
yeah,
money?
it was definitely.
Oh, it was well in the money, probably.
Yeah.
There you go.
Nice. So do you want to go first, Austin? Do you want me to go, or do you want Paul
About
to go?
strategy and stuff, or just about?
Yeah.
Okay, yeah, sure. So I mean, I guess I can try to share my screen now and see how this works.
Sure.
Let's go.
Like I said, guys, this is our first time doing this Google Hangouts thing together, and hopefully the quality
Got it,
turns
Austin.
out good.
You're good.
Okay,
That's
cool.
Tasty Works SPX.
Yeah, that's Tastyworks.
Yes,
It's a good
it is.
platform, actually.
I like it because I like a simple trading thing. Like, I mean, TOS is good. That's what I used at first. But there's so many, like, indicators and stuff you can put on it that it's just not my favorite. I like the simpler, the better. Like, if we zoom out here, let's see if I can go out to, let's see, I can do a 1 hour chart, 10-day or whatever. Let's go 2 months, whatever. Yeah, this is what my chart looks like. It's just an EMA line and its support and resistance lines. So if we go into today specifically, I trade on the 2 minute chart just because that works best for me, and also what works best for me because of school and stuff is trading the first like hour to 2 hours of the day. So as we can see this morning, we had a huge push down, and just in the morning we always have crazy moves. So that's where I like to make my plays.
Yeah.
And when you're saying moves, you're talking about volume, correct?
Well, I'm just talking about the stock or whatever you're watching moves.
But why does it move that first hour? Is what I'm asking. That first
Okay.
2 hours.
Yeah, so it moves a lot because what happens is you're basically a stock will like some news or some catalyst will come out overnight or it will gap up or gap down, and people are trying to get out of the position. So like that's why stuff is happening. Or
Right.
like so someone heard from I don't know their uncle that SPX for some reason we're getting into some war with somebody, so they want to sell like 100 shares or something. So there's just a lot of interaction of buyers and sellers happening within that first. Yeah.
Austin, Paul and I understand what gapping up and gapping down means, but a lot of these people that are going to be watching our YouTube videos, they don't know what exactly that means. Can you explain that, please? What gap up and gap down means?
Yeah, so gap up and gap down, I can't say obviously if they don't know, but it refers to the difference between the close price and the open price. So if you can see here, I have SPX pulled up from Tuesday, which was yesterday, and the stock closed here at around the 2,670 level, and then we opened in the morning at about 20 points higher. So this would be a gap up because there is a I don't know a better way to say it, but there's just a gap in the upward direction between the close of yesterday and the open of the next day. And there's also, this was another gap up here. And the way that I trade is I trade a lot of gap plays, and I trade a lot of break of support and resistance level plays. Those are my plays. So for instance, I'm going to explain what I saw today here. So like it started selling off in the morning, but I don't really care. I don't like to trade when a stock is in the middle of support and resistance because I don't know what it's going to do. But obviously right here was one of my support levels. So I trade like the break of support levels and the break above the resistance levels. So that's my trading, I guess.
Austin, I see that your red lines are your support and resistance lines, and then I see also that you've got an upward trend line coming up, and right where your upward trend line hits your support line, right there, it actually broke both of them. So that is
something I love to look for. I just like as much confirmation or as I can get. So basically here, So here, if we zoom in, if we can look here, so I watch this and it's coming down and we see a green candle. So I wait. I don't get in there for my short yet or my buy a put, which is making money on the way down. I wait until I see this drop below this previous wick because I'm now under this trend line and I'm now under the support line. And I didn't get filled there because it moved too fast. So then here was my next minor support level, and I was able to get filled here from there for a 12% gain. And I went back and I looked at the time frame, and it was done in a little less than a minute. And I was like,
Austin, I'm not able to see a cursor on your screen. Is that something that might show up later, or are you able to see a cursor on his Paul?
No, I can't see a cursor.
Or because I know he's saying this candle, but I don't know what candle he's referring to.
I guess we're gonna have to work that out later because I have no idea how I can get that. No one's ever told me.
Yeah, I use an app called Epic Pen that you might be able to download later on.
Oh, nice. Yeah.
I know Paul just got it today or yesterday, I think.
I didn't get it yet, man. I worked 84 hours last week.
Yeah. So I guess to summarize, since y'all can't see my cursor, I trade the breaks. So as you can see, that first yellow arrow is where I entered because it broke, and then the second yellow is where I exited.
Gotcha. Okay, yeah, I was just curious because I know you were saying that this green candle, and I don't know if you were pointing on it with your pointer.
Yeah.
But I wasn't able to see exactly what you were referring to.
Oh,
Okay.
that
Okay, I
wasn't
see you draw now. Yeah.
that green candle.
Okay, perfect.
That one in there.
That one, the one right at the trend line. Yeah,
I have a question, if you don't mind me asking.
of course.
Okay, so you're day trading the mostly higher liquid SPX, SPY.
SPY, Facebook, yeah, Boeing, yeah.
The question I have for you is, what expirations do you normally go with, and how far in or out of the? Okay, so say you pick a direction, you're like, okay, I know that this thing is the market's gonna go down, so obviously you're gonna buy a put.
Mm-hmm.
How far out of put are you buying, and how close to the money are you buying it?
So let's go look at a trade tab, I guess.
Sure. Sure.
So
Perfect.
I stick to the option that is expiring the closest. So obviously today it was this one because it was 0 days. It was expiring today.
Okay.
Just because everybody knows that these contracts are about to expire. So there's a lot of buying and selling going. So the prices tend to move a lot faster. Obviously, you can do the same thing I'm doing with like a week out, and they'll move slower. But I like them to move faster. But when I look, I'm just looking. I know y'all can't see my cursor, but hopefully you can read an options table. The volume and open interest is what I'm looking at. So
Okay.
of course the volume resets to 0, but I'm looking for what has had the most volume that day, and for a decent price. I usually like my contracts to be around $1 to $3 because those have a tendency, in my opinion, to move the best. So I look
I agree
for
with that.
so I look for a contract that's in between $1 to $3 that has the most volume for that day.
Okay, that makes sense. Paul, any questions for Austin?
Austin, you ever look at the tick chart?
I know
comes to
I
the
watched
market
your video on it, and then I went on YouTube and I picked up some others. I
Oh, cool.
I don't actually, but it will be something that I will look at more now that I've just seen it. Yeah,
Nice.
it's very
Yeah.
I didn't know that existed until that, but that's why we have groups like this so we can learn a lot more and new stuff.
Yeah,
Right.
exactly.
Let me.
When I come on, I can show a little bit of that tick stuff since
Yeah,
you did a lot of.
I'm gonna go on. I'm gonna go on real quick, Paul.
Okay. Yeah, go for it.
I know Austin needs to be getting out of here. You have about 5 minutes, right?
Yeah.
Roughly. So I'm gonna go over my thing real quick, and then I'm gonna take about a minute, if that, and then I'm gonna let Paul finish up. That way we.
Well, I might have some questions for you, but yeah, go ahead.
Well, I mean, if you have longer than 5 minutes, then but if not, I'm gonna have to rush through this. So I'm gonna go over a trade that I'm doing right now on. Actually, let's do AGN.
So, or a line?
Allergan.
Allergan. Okay.
Let me 5 days. 5 minute chart. Okay. So yesterday I bought the 155 put. I'm sorry, I sold the 155 put. I bought the 150, and then the expiration is April 27th.
Okay.
For this week, and then I sold the 165, and I bought the 170.
Are you showing your screen or no?
Yeah. Can you? Oh, you know what? I'm not showing my screen, right?
No.
Okay.
I'm following on mine.
Okay, my bad. Let me. Okay, this is the first time I've used Google Hangouts. My bad. I'm gonna get this down eventually. Okay. How about now? Can you see my screen?
Yeah.
Okay. How about this?
Yep,
Perfect.
got it.
All right. Are you able to see a cursor or no?
Yes.
Yes, sir.
You are able to see my cursor.
Yep.
All right. Cool. So basically, what I did. Okay. So AGN. I'll start over. I sold a 155 put. I bought a 150 put, and these are all expiring April 27th, which is Friday. And then, even though I show it as 162.50 here, I originally started with a 167.50. I'm sorry, 167.50, and then I had the 172.50 that I bought on the call side. So basically, it's created what's called an iron condor, and I needed stock price to stay within that range. Well, we had a dip down today. I don't know if you see this
Yeah.
this candle. We had a little dip down today, and I ended up. What I did is I brought my call side closer to the money. I brought it down, so I closed out the 167.50 and the 172. I think that's what I had. I don't remember exactly, but I brought this down to the 162.50, and then I have this as 165, but it should be 167.50. My bad. But basically, all I'm saying, Austin, is as long as it stays in this range right here, then I'm good.
Yeah.
I keep the
And
credit.
then
So
instead of having to worry about theta, you're collecting theta, right? Because you sold.
Yeah, so I'm a net.
Exactly.
Yeah, I'm net positive on theta. I'm a net seller. So basically, I took
You're always
in credit.
positive theta.
Yeah, I closed it. I posted a video earlier with everything on there.
Yeah.
And you can go back and review that. But basically, I'm selling options. As you and I both know, most options will expire worthless.
Absolutely.
And the person that's selling them is, basically the winner.
Yeah. Absolutely.
So I've never been good at picking direction, but I've been fairly well at picking where it's not going to go, and that's basically what I do. I don't need to know where it's going, or where it's going, or I need to have somewhat of a direction. But for the most part, this thing can run up to the 160, 250, and I'll be good, and then drop back down because this thing expires on Friday.
So yeah, that's Condor. What was the max credit that you took in on the Iron Condor?
On this, well, see, I didn't. Wow, I did.
Right
I did a video earlier of how I rolled it down,
Okay.
but I took in a net of 100 right now, and I don't know why it hasn't. Taz hasn't been saving the work for some reason, but yeah. So it's doing its thing. I'll go over one more, and then I'm gonna let you talk, Paul.
Okay.
So one more trade that I did. I started out with a bull put, a 165, 160 on Apple, and I ended up, and I bought. So I sold the 165, bought the 160 put, and it just started breaking down. I saw very strong support at 165. The last day, it started breaking. It broke down here to 160, 160, 122. So what I did is I ended up selling the 167.50 and buying the 172.50 and took in a credit. And then what I did is the market came even further down this morning. So I rolled my 165 or the 167.50, and I created a iron butterfly here. So my short call is at 165, and my short put is at 165, and my long put is at the 160, and my long call is at the 170.
As a day trader, I really like the way that Apple looks at the moment. Just FYI.
Okay. As in
support, or
as in to me, it looks like a triangle breakout. So that's what I see. As you can see, the past 2 days, your lows have been getting higher, and you've been staying around the same resistance level. So that is either poised for a huge breakout to the upside or a continuation downward. So that is how I would trade it.
Okay, and I'll show you how it looks on a 1 day, 1 year. So this is for 1 year. But yeah, I saw strong support in here. As an option seller, I don't really care about intraday stuff.
Yeah.
I mean, I do somewhat to a point because, especially getting closer to expiration, I need to make adjustments. But for the most part, I don't really care what it's. I just need to see where it's somewhat gonna go. So I think we're gonna get back up in this range, and hopefully I these short strikes to the 165. But I'll make adjustments as need be. But I'm gonna finish with that and let Paul get some time. That way you can get going, Austin.
Yeah.
So let me stop sharing my screen. Give me 1 second. Stop sharing. Paul, you still there?
Yep, perfect. Okay. I'll purchase long options. I'll sell like Tim had said. I'll do day trading like Austin had said. So basically, it's what does my day kind of consist of at that point? Am I going to work? I'm not going to be day trading, obviously. I'm going to put on some longer term stuff. Or if I'm at home trading, I'm going to be doing some day trading stuff. Right now, since I'm got all this work going on, I'm doing some longer term things. And so I'm going to show two butterflies that I had put on, which is a little bit more of an advanced topic. But I can show how and break this down, how this exactly how this works, so that everybody can see what happens here. So let me go ahead and share my screen. Okay.
Who's that handsome guy?
Alrighty, I'm gonna get you guys out of the way here. Okay. Now, this is different. Let me change this.
You look like a trading firm with all your screens.
And actually, that's actually kind of cool because my 401k at work, all of the funds through Wells Fargo. Let me actually bring that back up real quick. All of the funds that we can pick through Wells Fargo for our 401k, every one of those funds is traded online. It's traded on the stock market. So every one of these funds is what we can diversify into, which is cool because I can track the progress and the performance of each fund every day live if I want to, instead of having to get a 3 month.
Yeah, that's awesome.
Here's what you did in 3 months. Okay, cool. I wish I would have known what was going on before I got that. So that's what this whole thing is. But when I'm day trading or anything, this is the chart that I normally have up.
So what do you like day trading?
What's that?
What do you like to day trade?
SPX.
Nice,
I would like to day trade SPX. SPY sometimes. But SPX, let's see, I've got a list.
No, it's fine. I was just curious. What?
Yeah. Well, what I like to day trade are things that are cash settled at options expiration. So nothing you're going to assign.
Yeah.
If I'm going to get assigned something, I
that
don't,
sucks.
because the whole day trading thing. So I will trade SPX for the S&Ps, RUT for the Russell.
Yeah.
DJX for the
And
Dow.
those are all of the indexes, so you get that tax advantage.
Exactly. Those are all indexes. OEX, VIX, also for the VIX, and NDX. All of those 6 are all cash settled. So that's what I like to trade when I'm day trading. But normally 9 times out of 10 is SPX because I like the way it moves.
Me too.
Like you had said, Austin. I stick with the closer expirations because, like you said, prices tend to move quickly. So I like that the price is moving a little bit quicker. But as far as the butterflies go, let's see. I have my screen here. I had purchased a butterfly on Raytheon. Let me change this to a 1 year. Okay, and we're done thinking. Good. I had purchased this butterfly back on 322, so that would be right here. I had purchased a butterfly, seeing that this momentum coming up here with this trend line was following really well. So right about 322, somewhere right in here when it was coming back down, I had purchased a butterfly for the April
Could you
16th
quickly
expiration.
explain a butterfly to people like me who don't know?
Okay. That's perfect. And actually, I have my screen detached over here, so I was going to bring it over for the actual position itself. And what I had done is I sold it for the April 20th expiration.
So basically, do you want it to stay in between a range, or how does this work?
Yes. What I want it to do is I want it to come into a range.
Okay.
Whereas, like what Tim was doing with the Iron Condor, he wants it to stay within a certain range.
Okay.
With a butterfly, you purchase that either out of the money, which is normal. You want to purchase it out of the money when looking for the underlying to move into your butterfly. So this is what I've got going on here. 322. Can you guys see my cursor?
Yeah.
Yeah.
Okay, 322. Right here is when this was a canceled order because I was trying to be a dick for a tick and buy it for 90 cents instead of what it was going for. It was 93.
I do
I
that. I do that also with the day trading stuff. Yeah.
Oh, with the day trading, you have to. You got to squeeze out every penny you can. So what this is a butterfly. Is you purchase one further out of the money. You sell two that are closer to in the money, and then you purchase another one even closer to the money. So I had purchased a 220 call. I sold two of the 230 calls, and then purchased a 240 call. So what that gives me is a 10-point wide butterfly. So because the everything's 10 points wide, obviously. So with the goal of a butterfly is you are looking for a pin. You are looking for the underlying stock to pin at a certain price, and that price is your two short contracts right here. So I was looking for Raytheon to pin at 230, which what that would do.
Paul, quick question. So your butterfly? What's the difference between yours and mine on my Apple trade? I want to pin at 165 on the Apple trade.
You want to pin? What were you doing? A butterfly?
I was doing an iron butterfly.
An iron fly. Okay. So with the iron fly, you are purchasing. You're selling basically like a straddle.
Yes.
You're selling a covered straddle is what you're doing. So that's where you're selling two of the same strike, a call and a put, and then purchasing, let's say, either 2.5 or 5 points further out to kind of protect you on the downside.
Okay. I just wanted to make that clear because we both said butterfly in the video, so I wanted to make the audience clear. But
so let me actually detach my.
Well, I know that y'all are going to be recording this as well. So for my video personally, I just wanted to ask y'all real quick because I need to end mine. I think my question is what do you think about the markets for the next few weeks or few days, or how do you think everything will play out since we are in this this correction type market that we're in?
Are you asking Paul or
both
me?
of y'all? Yeah.
Go ahead, Paul. I'll let you answer first.
Okay. Well, if you guys can see, I have the ES up here right now. See that? I've got the S&Ps. Can you guys see that?
Yes.
Yeah.
Okay. All right. I was just making sure. I was looking for confirmation. Anyway, you guys see a lot of lines on the screen, but these are just my Fibonacci stuff going on here, and then this support line down here. As you can see, ES is trading up in after hours, but what we have down here is a daily squeeze. It's a volatility squeeze. It has not fired yet. But what I did see is, and side note, you can draw Fibonacci on your phone now when it comes to.
I know they just upgraded the app, right?
Oh, I know. I can't wait. It's awesome. So I am going to show you real quick the 30-second spiel here. When you're doing Fibonacci, what we're looking for is support and resistance when it comes to that. So if I do this one here, this actually is going to be above the market, way up here, so we can delete that one. But what I had found is we hit resistance when it comes to this rally that we're seeing right here. We kind of hit resistance right here with this 100%
Well, I mean,
projection.
yeah, if you go on the one day, it was like a clear, since I trade a lot of candles, I saw that on the one day there was a perfect doji / end decision candle at the top.
Yeah, no, you are 100% right. So what we had here is that this decline here, the retracement of the rally came up at the 618 extension, which is a very, very prominent Fibonacci level, and which overlapped the 100% projection from here down there. So that is really, really strong resistance. So I saw that this is after, because I was working so much, I just drew this out on my phone earlier today. But knowing if I knew this was coming, I would have gotten a lot lighter on my longs. Knowing that this resistance was coming and then rolling back over, this is kind of what I saw here. So I really don't like the direction that we're going right now, because we're seeing small gaps up overnight, and then those gap ups are just getting destroyed throughout the day.
Yeah.
So that's what I'm seeing, and any sort of strength is just getting sold like crazy. So that's kind of what I'm seeing. We're below the 382 of the major retracement from February. And if we come up here, that 382 is going to act as resistance, along with this fire line, which is a whole different ball game when it comes to that line. But we're going to come up here with the 382, and this fire line is going to be resistance coming back up. It right here. These lines took 1, 2, 3, 4, 5, 6, 7 hits to get through this 382 here. So this is going to be strong resistance here. So I would say throughout the rest of the month, if it does retrace back into here, this is going to be great iron condor selling for you, Tim. It's once we get into here, if this acts as resistance, that's what I see coming up in the next, say, 7 to 10 days of trading. This is going to act as resistance, and I have a feeling we're going to consolidate right here for probably the next 7 to 10 days. That is my 2 cents on the market.
Awesome. That was a pretty good analysis, man. I like that. I'm not, Austin, to answer your question, I'm going to kind of twist it. I'm not really going to answer your question because you have NBC and all these other analysts going on the market saying, or going on the news saying what's going to happen or what's not going to happen. All I'm going to say is the average person sees this downward movement in the market itself as oh shit, this is 2008 all over again.
Yeah.
I don't know what the hell to do. I know Paul was just talking about his funds at work. Usually with those funds, whether it's an IRA account or a defined benefit program, but when you have those funds and these accounts, usually if you want to sell it, it doesn't sell it at the price of that day. It sells it at whatever it closes at. So a lot of people are going to be looking at their accounts constantly being depleted, if we do go into this down market. But as options buyers, sellers, and everything else, we have an advantage because we can take advantage of the down movement. We can take advantage of the up movement. And without that proper education, knowing, for example, with your style of trade, a downward movement, like you were saying, is perfect. Most people are going to be like, oh, shit, the market fell down 50 points, 100 points today. And you're going to be like, oh, shit, I'm going to go eat freaking steak dinner tonight because I just made $200-$300.
On puts when the market's red, we're talking like easily 2,000 to 3,000% gains. So I'm saying put in 200, make 6,000.
Right. So just to finish off, all I'm going to say is if you don't at least take a look at the options, whether you're a net option buyer, a seller, whatever style you use, it doesn't really matter. But if you don't have at least a little bit of knowledge of the market, you're going to I don't know what, I think that was mine. You're going to be ready to look at the news and see all these analysts yelling doomsday. But all three of us can tell you can make money in a market going up, going down, and going sideways. And it's been proven time and time again. So I'll finish off with that. And Paul, do you want to add anything before I get off and you get off? And Austin, let him go.
No, I mean, I think you just hit it right on the head. People that they see the news, they watch CNBC, MSNBC, even Fox Business, anything that you watch, you have all these analysts screaming, oh, this stock, this stock, this stock, that stock, that stock, that stock. I mean, it doesn't. At that point, it doesn't matter. All that matters is what the market makers care about. And just because some analyst says, "Oh, this stock, it has, 10 points decline before it gets to its actual true value and everything,"
right?
Yeah, that might create a little bump in the market or in that stock. Or if, oh man, we're going to war with Korea, whatever, then I have a feeling a lot of these, analysts and all this stuff, they have vested interest in these different stocks that they cover.
Exactly.
And it's extremely evident when it comes to, say, an investment house comes out and downgrades a certain stock, and then all of a sudden it drops 5-7% in that week. Well, Watch the end of the week. That same investment house is going to scoop up a truckload of shares because they beat it down. It happens day in and day out. So when you see all these analysts saying, "Oh, doomsday this, doomsday that," and everything, and everybody's saying, "Oh man, you got to get your money out of the market. You got to get your money out of the market. Things are going to go to hell." Well,
Right.
to the people that don't understand, lots of money can be made on the downside. There were more millionaires minted in the Great Depression than any other time in history. Look it up.
Nice.
So
Okay.
there's so much money to be made on the downside that even market going sideways, like you do, Tim, there's a lot of iron condors that make money. Market goes sideways. Buying options, buying stock, market goes up. There's so many different ways to make money in the market. You just have to find your niche or be able to tell what's going to happen, which nobody knows what's going to happen tomorrow.
Exactly.
You have your technicals, you have your education, you have your educated guess as to what's going to happen. But when it comes down to it, listening to all these analysts on TV and everything, that is going to get you to lose money. Educating yourself on how the market works, that is the way people make money.
I want to add one more thing in, Paul and Austin, before we get off. Austin, I know we've kept you for 17 minutes over, but hey, that's kind of what we do. Once you start talking about money, that
for sure.
The time kind of goes away. But one more thing, I like to put, and I probably should stop doing it because there's been a couple times where I posted the YouTube video and it had my account number. I was like, oh shit, I had to take it off. But Paul knows I've never met the guy personally. You're asking, do you guys live close to each other? We don't. I've never met him personally. Yeah. I've talked to him on the phone. We text each other all the time.
This is the closest in person we've ever met.
Yeah. Seriously. So, but what I will say is I like to be very transparent with what I do. And the reason being is because Paul can attest this, and I don't know about you, Austin, but I've signed up for services in the past where they're doing these recommendations. They're saying, oh, I buy XYZ, and I'm like, oh yeah, 20% gain on XYZ, and I'm like, wait a minute. We took the same trade at the same time, and I lost 10%. Oh, well, you didn't get out early enough. Well, why don't you damn show me your statement and show me where I missed something? Because, oh, well, we don't show our statements. Well, I've proven it on the Robinhood, on the Facebook Robinhood page. You can use a PDF editor or whatever and white your name out, and that's why I do that. Is because, like Paul said, a lot of these analysts don't have a vested interest, but everything that I post, I have a vested interest. And I take the trade and I do it. I don't say, what do you guys think about this trade? Yeah. I put the trade on, I post it, and then you guys can either judge it, or I can look like an ass, or I can look like a freaking like a magician. But I will say, I'm gonna finish with this. I do have my winners, and I definitely have my losers. And anyone that says otherwise is full of shit, and I will say that on YouTube right now.
Absolutely.
Anyone that doesn't admit they're losers is full of shit, and you run away. And that's why I appreciate Kirk from Option Alpha, because that guy is so humble. He does talk about it. He shows his losers. So I'm gonna finish with that.
All right.
You guys see my screen right now?
Yeah.
Okay.
I really have to go, so that was great. I hope y'all's video goes well, and thanks for talking. It was great. Hopefully we can.
Paul and I will finish off, buddy.
Yeah. Hopefully we can do this again on Sunday or whatever.
Awesome. Sounds good, man.
Bye.